You're listening to AI Prism from Seoul Economic Daily.
It's Monday, June 1st. Let's look at what this means for retail investors in Korea. Korea's KOSPI just posted back-to-back monthly gains of over 28%, the biggest May rally in the index's history. But the story underneath the headline numbers is more complicated than it looks. Foreign investors sold 44.7 trillion won, about $31.9 billion in May alone. That's mechanical rebalancing, not a fundamental exit. But retail investors are now sitting on a market where the top 10 stocks account for 60% of total market cap. If you hold a Korea ETF like EWY, your exposure is heavily concentrated in two names, Samsung Electronics and SK Hynix. Understanding what drives them and what could slow them is the real story right now. It's Monday, June 1st. Let's look at what this means for retail investors in Korea. Let's start with where we are. The KOSPI closed May up 28.45%. April was up 30.61%. In historical terms, those are the second and fourth largest monthly gains the index has ever recorded in a normal market environment. The driver is semiconductors. Q1 global DRAM revenue hit $97 billion, up 80% quarter-on-quarter. Samsung Electronics holds 38% of that market. SK Hynix holds 29%. These are not small numbers. The ETF market crossed 500 trillion won, roughly $357 billion for the first time, but 40% of new ETFs launched this year are semiconductor-related. 16 single-stock leveraged ETFs tracking just Samsung and SK Hynix were launched in a single day last week. Now, what does that concentration risk mean for you? When a single sector dominates ETF flows this heavily, a sharp reversal in semiconductor sentiment doesn't just affect chip stocks, it affects the index, and it affects the ETFs that billions of retail dollars are sitting in. There are two near-term pressure points. First, the Bank of Korea has signaled rate hikes in the second half of the year. Fixed mortgage rates are already between 4.26% and 6.95% at major banks. The market thinks the ceiling could reach 8% if the BOK moves. Higher rates compress valuations, especially for growth-driven names. Second, household debt as a share of GDP is falling, but only on paper. Korea's semiconductor export boom is inflating nominal GDP, which makes the ratio look better statistically. The actual debt load hasn't changed, and a rate hike cycle on top of that debt is a real strain on household spending. At a Hana financial investor event last week, analysts said KOSPI 10,000 is a waypoint, not a destination. AI investment cycles historically last longer than traditional chip cycles. The case for staying invested in Korean equities through quality names is still intact. But June has specific risks. June 2nd brings May CPI data. The market expects a reading above 3% for the first time in months. June 11th is Korea's quadruple witching day, and June 18th is FOMC. The catalyst that really matters, Q2 semiconductor earnings, doesn't land until July. Three things to watch this week. May CPI on June 2nd. If it prints above 3%, the BOK hike timeline accelerates. OECD growth forecast update on June 4th. The Bank of Korea has already raised its 2026 growth target to 2.6%. And Jensen Huang from NVIDIA is visiting Korea this week following the Computex conference in Taipei, meeting with Samsung, SK Hynix, Hyundai, and LG leadership. Any announcements on HBM supply or physical AI partnerships could move Korean semiconductor names. That's today's AI Prism, retail investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.